Good evening, everyone. Time for another silver update. This is a chart provided by netdata.com. You can click on the link below. It is a overlay of the price of Apple Computer and silver. Now, this is roughly a 15-year period, a little bit more, a little bit less, but if you just go by these percentages, you can see that over this time frame, silver has returned just a little bit less than 500%, while Apple Computer has returned 6,526%. If you average this out to a yearly return, silver is averaging over this time frame roughly an 11% per year return for 15 years. And Apple Computer comes to 54% per year for 15 years. Now, obviously the bulk of that has been done since the March 2009 bottom in the stock market. You can see that it ran from being a 750 or so percent gain all the way up to a 6,500% gain. So an enormous move. The point being that, first of all, it's clear that the money that has been printed by the Fed has flowed into certain assets, and one of those has been Apple Computer. The other point is that if you remember at the May smackdown of silver, you can see that right here. We were told that silver was in a bubble. Now, silver appeared to be in a parabolic move. You can see from the correction we have here and now where we are that it is no longer at all in a parabolic situation. The only question is, are we going to correct all the way back to this high we had all the way back in 1998, or roughly? So actually no, that's Apple. It was 1998 was back at Warren Buffett, so that's a high in Apple. But is silver going to correct back down to here at 2008? You can see on Apple's chart they did correct back, but this last run has not been corrected at all. So the third point is that clearly this is a parabolic blow-off in the price of Apple Computer. This type of formation is what they were saying silver was, and obviously is no longer, but this is something that presages a crash. We're now getting to the point where we're reaching infinite price in zero time. In other words, the price is going straight up. That will always result in a catastrophic collapse. So at some point, Apple Computer is due for a catastrophic crash, probably taking all the rest of the stock market with it. If you look on Zero Hedge today, there's a number of articles mentioning the percentage of gains that Apple represents in the NASDAQ as well as the S&P 500. So this is clearly a bubble. Silver is clearly not a bubble, and I expect these to actually change places at some point in the future. Now over to the question of the day from the forum. This is from Matt38. He says, I watched a YouTube video recently of Alex Jones interviewing Pastor Lindsey Williams. Pastor Williams talks about the upcoming economic collapse and says to watch the derivatives market, not the stock market, as a leading indicator. When derivatives collapse, he says the euro will fall and the US dollar won't be far behind. Now, first of all, what is the derivatives market? It's become so confused now that the stock market is essentially the derivatives market, because we have so many of these interwoven ETFs and these funds that trade the S&P and the NASDAQ, and we have all these computers trading these, and we'll see this in the article that we read from Mike Krieger in a bit here. But so I don't really see a lot of distinction between the derivatives market and the stock market. Now here he's pretty much referring to commodities. He says, I'm a farmer who raises corn and soybeans. I'm very concerned about a collapse in derivatives/futures markets. Several years ago, Verasun ethanol plant filed bankruptcy, and farmers who had futures contracts were forced by federal bankruptcy court to deliver the bushels, but farmers were not paid the $6 to $7 per bushel per their contractual agreement with Verasun. Instead, they were paid about half. Fortunately, I was not one of those farmers. What are your thoughts on Pastor Williams and his thoughts on the impending collapse of derivatives? What leading indicators in derivatives should we be aware of when the system is starting to crack? By the way, I have only one 5,000 bushel soybean futures contract. If and when there is hyperinflation, I don't want to be locked into contracts and literally give my crop to the wolves, thieves, crooks of LaSalle Street and Wall Street. Thank you for all you do. I truly appreciate and admire your honesty, integrity, and intellect. Thanks again. So you need to go back and look at the original purpose for the futures market. Of course, the whole futures market came out of the commodity market initially, and the commodities market it instituted the futures contracts for the purpose of hedging the crops, and that's because the crops came in the seasonal time frames, and the farmers were in a situation to be able to essentially borrow against their crop by locking in and locking in a fixed price and protect themselves from a low price for everyone dumping all in the market at the same time. So they could lock in various futures contracts. Now, with the MF Global situation, I think we've already seen at least a collapse in trust in these futures markets, if not a collapse in the markets themselves. So you have to remember that these farmers are primarily hedging against a deflationary scenario, a scenario where the price of the crop goes down drastically. They're just trying to get some kind of stability to the price. I really don't foresee a situation where prices are going to go down on any of this stuff anytime soon. Certainly, if we get the type of petrodollar collapse or an unwinding of the international system, one of the best places to be in America is going to be in farming, just because that's going to be one of the real exports that the U.S. is going to be able to produce to generate Forex in whatever system is next. So if the BRICS get together and they put their own currency forward and it begins to be viable, or you get a trilateral bloc with Europe and Asians or something like that. Either way, whatever comes out, the farmers of America are going to be able to export to a foreign market, because that is going to be one thing that you're probably always going to have in demand by these people with hard currencies in other countries. Is going to be the foodstuffs that we can produce. So I don't really see the need to hedge against the deflationary scenario. So I think the writing's on the wall for this. Probably a lot of farmers are going to be moving away from that. And certainly the private contracts with one particular company may be something as well that needs to be avoided. So maybe they just need to go back to the cash market, or maybe some type of market needs to replace that. But I think the futures market now is turning out to be a bust. So over to the main story of the night, and this one is one that appeared on Zero Hedge. I just want to read this because Mike Krieger does such an excellent job of summarizing where we are. He's one of those people that has the ability to really distill where we're at and what situation we're looking at and what's gone on. So I wanted to read that to you. This is from Mike Krieger of KAMLP. The powers of financial capitalism had another far-reaching aim, nothing less than to create a world system of financial control in private hands, able to dominate the political system of each country and economy of the world as a whole. This system was to be controlled in a feudalist fashion by the central banks of the world, acting in concert by secret agreements arrived at in frequent private meetings and conferences. The apex of the system was to be the Bank for International Settlements in Basel, Switzerland, a private bank owned and controlled by the world central banks, which were themselves private corporations. Each central bank sought to dominate its government by its ability to control treasury loans, to manipulate foreign exchange, to influence the level of economic activity in the country, and to influence cooperative politicians by subsequent economic rewards in the business world. Carroll Quigley, Bill Clinton's mentor at Georgetown, from his 1964 book, Tragedy and Hope. And then we have a quote from Tacitus: "Crime once exposed has no refuge but audacity." Central planning for dummies, there will be QE. For several years now, I've been sounding the alarm that if you want to be engaged in the financial markets, you need to assume that markets are being managed, rigged, more aggressively than at any moment in any of our lives. The Bernanke and others on Wall Street and the District of Criminals understand that the situation is pretty much hopeless. Ever since 2008, they've had one strategy. From a monetary and fiscal standpoint, that strategy has been to pump massive amounts of liquidity into the system while at the same time borrow enormous amounts of money. The thinking was that this would stabilize the situation, create confidence, and thus ultimately a dynamic, sustainable recovery. They certainly bought a few years with this plan, but confidence has not returned, nor has there been any sustainable recovery. What we need to understand at the moment is that the Bernanke and all his fellow Keynesian central planning magicians know that they have failed. This is why he's running around college campuses presenting his sad and intellectually dishonest presentation of propaganda that even a 6-year-old could refute. In fact, several people have done just that. Here's a good one, and he gives this zero hedge. Moreover, Jim Grant recently gave an incredible speech at the belly of the beast itself, New York Federal Reserve, where he completely undresses the Fed right to their face. You must read this one. Another Zero Hedge article. So what we need to understand is that we are in one of the most dangerous phases of this crisis at the moment. The priests of fiat are being attacked from all sides. People have awoken to the Fed and how criminal and deceitful this organization is, and the existential threat it poses to economic freedom and hence human liberty. The arguments against the Fed are blistering, and the only rebuttal the Fed has is to spout the same old nonsense like "we saved the world" or some trite derivative of this fallacy. The only thing they saved are untalented speculators from their bad bets. What the Fed has systematically done is literally transfer all of the bad debts and bets from the banks to the taxpayer. We are living this reality to this day. This fact is becoming increasingly understood throughout society, hence the emergence of the Tea Party and then last year's Occupy Wall Street movement. So the thing I want my readers to really internalize is that the Fed, and indeed the powers that be generally, are getting slaughtered in the intellectual arena, and they know it. As a result, they feel cornered and thus will act increasingly aggressive to prove they are right and everyone else is wrong. As I have said many, many times before, the Bernanke needs to create more money, and he knows it. He is irate beyond belief that his academic theories have not worked. He is furious that he can't make the housing market come back to life. He is having a temper tantrum that people actually have the nerve to link printing trillions of dollars to the rise in commodity prices. He wants to launch QE3 this quarter, but he feels like public opinion is against him. He's right. And Obama is having his own little panic attack about gasoline prices in the election. So what's a central planner to do? Well, exactly what they've been doing as of late. Lie. The release of Tuesday's Fed minutes was unlike any I have witnessed before. The Fed minutes are usually interesting to read, though, and every now and again there are some very useful nuggets in them. That said, I have never seen them used as a way to make a statement and impact markets, as was the case with the latest release. As soon as it came out, there was the red Bloomberg headline, "FOMC saw no need to ease anew unless growth slows, minutes show." After this came out, the market sold off, but in particular gold was rated aggressively. I had noticed a weakness in mining shares in the morning, which is almost always a signal a raid is coming, as I mentioned this to friends. There's no way in a free market I could have foreseen this raid so easily. The reason I could see it ahead of time is because This was a very well orchestrated attack on an asset the powers that be are desperately afraid of. Gold to central bankers is like sunlight to vampires. What I found most interesting is that several people seemed confused. I read statements like, "I don't know why the markets reacted this way. They said nothing new." The markets reacted the way they did because that was what the central planners wanted. I mean, reacted that way to the minutes. A few PPT machines. There is no volume in the markets. Retail is dumping stocks week after week, and prices are being set at the margin by manipulators in a futile attempt to bolster confidence. Hasn't worked in 4 years, so they are doubling down on this strategy, of course. Despite the nonsense they say about not needing to do QE3 because the economy is better, the exact opposite is true, and they know it. They also know the minute they announce anything, gold, silver, oil, and other commodities will surge to the stratosphere. That said, the goal is to try anything they can to get oil and the precious metals as depressed as possible ahead of the announcement. That is what the Fed Minutes announcement operation was all about. While they have knocked precious metals down, oil is proving to be a much harder nut to crack. This is very interesting because it appears that these clowns have gotten as much mileage as they can out of the "we don't need more stimulus" lie. What will they come up with next? I don't know, but I know the Federal Reserve and the powers that be understand they are fighting for their lives and their survival. They will pull out any and every trick in the book before they die. The more cornered they have become, the more aggressively they have acted. Watching the most powerful people on the planet fight for their inevitable demise has been and will continue to be fascinating and frustrating. They will fight and fight. They will rig and rig. They will lie and lie until one day the whole thing will end seemingly overnight. They will vanish into history, disgraced and remembered for time immemorial as some of the biggest fools in world history. Wow. What an incredible screed. An amazing tirade by Mike Krieger. I couldn't agree more. He just laid it on the line. It's really incredible. So I encourage you to read the rest of that article in the comments. I'll link it below. The thing to remember is that we go back and look at the chart here. They have a certain amount of power to control where the money they print goes, but it has to go somewhere. We can see that an enormous amount of it has gone into Apple Computer, which has become a bubble. Some people are projecting that it will be the first company with $1 trillion market cap. From my experience, virtually every company that's hit the $400 to $500 billion market cap has then subsequently collapsed. Apple's now over 600. Maybe it will be the first company to hit the $1 trillion market cap. At this pace, that's probably only a couple months away. So we're reaching that parabolic point, and Apple is going to collapse. Silver, on the other hand, has already corrected from what wasn't even a parabolic rise in the beginning. Now it certainly is just a market that has corrected a small amount and is ready for another phenomenal rise. So the time is here to stack more silver, and as Apple collapses, hopefully some of that money flows into the precious metals where there's real value. And we'll talk to you next time.